Thank you for joining me for the March 2026 Booze Compass briefing. Executive Summary. March 2026 witnessed a dramatic reshaping of the global beverage alcohol landscape, headlined by confirmed merger discussions between Pernod Ricard and Brown-Forman that would create a $30 billion spirits powerhouse combining iconic brands including Jack Daniel's, Jameson, and Absolut. This potential consolidation, described as a merger of equals with significant anticipated synergies, reflects defensive positioning amid a multi-year industry downturn characterized by declining consumption, elevated inventory levels, $22 billion in aging spirits inventory, and a 19.8% drop in U.S. wine volumes since 2021. The month also saw aggressive distribution consolidation with Reyes Beverage Group's expanded RNDC acquisition across 11 states, Southern Glazer's purchases of Eagle Rock Distributing and Claire Rose, and Molson Coors Monaco Cocktails acquisition marking its RTD portfolio expansion beyond beer. The industry's structural challenges intensified with multiple brewery and winery closures, including BrewDog's U.S. administration, sold to Tilray for $33 million, Goodwood Brewing's taproom shutdowns amid mounting debts, and Kenwood Vineyards' permanent closure by Pernod Ricard, with all 14 employees laid off. Financial distress rippled through craft segments with bankruptcies from Rotten Little Bastard Distillery, Chapter 7, and Uncle Nearest's failed bankruptcy petition, while the Canadian trade war devastated U.S. wine exports by $357 million, 78% decline. Against this backdrop, premiumization and RTD innovation remained bright spots, with spirits-based RTDs posting 30% plus growth, premium rum showing potential to follow tequila's trajectory, and functional beverages booming as health-conscious consumers, particularly Gen Z, reshape consumption patterns toward moderation, transparency, and experiential value over volume. Category analysis. Mergers and acquisitions. The dominant M&A story of March 2026 centered on Pernod Ricard and Brown-Forman's confirmed merger discussions, a transformative deal that would unite the world's second-largest spirits maker with the largest producer of American whiskey. Both companies officially acknowledged the talks on March 26-27, describing the potential combination as a merger of equals that would generate significant operational synergies while creating a balanced global spirits leader with combined annual sales approaching $15 billion and volume exceeding 200 million cases. The strategic rationale is compelling. Pernod would gain dominant American whiskey positioning through Jack Daniel's and Woodford Reserve while strengthening its tequila portfolio with Herradura, while Brown-Forman would access Pernod's superior international distribution infrastructure for brands like Absolut Vodka, Jameson Irish Whiskey, and the Glenlivet Scotch. Market reaction proved dramatic, with Brown-Forman shares surging over 20% on confirmation, reflecting investor optimism about consolidation as a solution to industry-wide challenges, including declining consumption, tariff pressures, and competition from cannabis products. Distribution consolidation accelerated aggressively through multiple major transactions reshaping the three-tier system. Reyes Beverage Group, already America's largest beer distributor, announced expanded purchase agreements to acquire Republic National Distributing Company, RNDC operations across 11 U.S. states and Washington, D.C., marking Reyes' largest acquisition to date and its strategic push beyond beer into wine and spirits wholesaling. Southern Glazer's Wine and Spirits simultaneously pursued its own expansion, announcing agreements to acquire substantially all assets of Claire Rose Inc., the leading Long Island beverage distributor, and Eagle Rock Distributing Co.'s Colorado operations encompassing beer, hard beverages, and energy drinks, with the latter expected to close summer 2026. These moves come as Southern Glazers faces federal legal challenges, positioning Reyes as an increasingly formidable competitive force in a consolidating wholesale landscape. The distribution layer's consolidation mirrors supplier-side M&A as both seek scale advantages amid volume pressures. Beverage-adjacent and smaller-scale deals rounded out the M&A landscape with strategic portfolio reshaping across segments. Molson Coors acquired Atomic Brands, producer of Monaco Cocktails, marking the brewing giant's first spirits-based RTD brand acquisition, as it diversifies beyond beer's structural stagnation, with RTD cocktails showing 30% plus growth rates. Tilray Brands entered an asset purchase agreement for BrewDog's key U.S. assets, including the Columbus Brewery, hotel, and pubs in Ohio and Las Vegas, accelerating Tilray's regional jewel craft beer strategy following BrewDog's administration and $33 million sale of UK operations. Sazerac expanded its Texas-based RTD portfolio by acquiring Dirty Shirley vodka cocktails, following prior purchases of Buzzballs and Western Sun vodka. In wine, Rocco Winery, Herita USA subsidiary, acquired Francis Ford Coppola's Domaine Lumineux Oregon vineyard, while Fortress Investment Group prepared Majestic Wine for sale after 7 years of turnaround efforts, and Pages Vedrine Group acquired Mandarine Napoleon liqueur from De Kuyper, demonstrating continued brand portfolio optimization even amid market headwinds. Financial developments. Financial distress intensified across the beverage alcohol sector in March 2026, with a wave of closures, bankruptcies, and restructuring signaling deep structural challenges facing smaller producers and regional operators. Brewdog's collapse proved most dramatic, with the Scottish craft brewer entering administration and selling core UK operations to Tilray for just $33 million after accumulating financial losses and rising debt, resulting in 38 bar closures and 484 job losses in a stunning contraction for the once high-flying brand. In the U.S., Goodwood Brewing permanently closed 2 Louisville taproom restaurants on March 30th amid mounting lawsuits over unpaid rent, debts, and back taxes, while Memphis Made Brewing shuttered its downtown taproom following Chapter 11 bankruptcy, filed in August 2025. Proximity Brewing closed its Driver Street taproom in Durham due to high operating costs, and award-winning True Anomaly Brewing in Houston announced permanent taproom closure attributed to Interstate 45 expansion project impacts, exemplifying the craft beer apocalypse affecting the oversaturated brewing segment. Spirits and wine segments faced parallel financial stress, with notable bankruptcies and operational contractions. Rotten Little Bastard Distillery in South Carolina filed Chapter 7, liquidation bankruptcy on March 10th, with assets of approximately $152,554 against liabilities of $395,265, citing economic challenges and shifting drinking habits. Uncle Nearest Tennessee. Whiskey's attempt to exit receivership through Chapter 11 bankruptcy was dismissed by a federal judge who ruled only the court-appointed receiver held authority to file on behalf of the company, extending the brand's financial limbo amid a $100 million lawsuit from its Louisville-based lender, alleging loan defaults and misstated barrel inventory values. California's wine industry saw Kenwood Vineyards permanently close operations with all 14 employees laid off by March 31st, sold to Kenwood Winery Land LLC amid significant industry revenue declines, while 30-year-old Aloria Vineyards filed Chapter 11 bankruptcy to reorganize amid the broader U.S. wine production and revenue downturn affecting the sector. Amid the distress, select companies demonstrated financial resilience and strategic capital deployment. Innovation Beverage Group closed a $6 million public offering to support its pending merger with Block Fuel Energy, advancing a dual revenue model spanning premium beverages and energy digital asset mining. Chobani announced a massive $567 million multi-phase expansion of La Colombe's Michigan coffee production facility, responding to surging RTD latte demand, creating jobs and increasing regional milk purchases. Carlsberg exceeded synergy targets from its Britvic acquisition, boosting margins and confirming 3 to 5% operating profit growth guidance for 2026, while shifting toward premium and low-alcohol beverages with successful integration, demonstrating consolidation benefits. Constellation Brands, despite strong Mexican beer brand performance, faced headwinds in wine and spirits with a 20% organic sales drop in spirits and lowered outlook due to shrinking consumer demand, leading to stock price pressure. National Beverage Corp reported increased winter quarter net income, while improving margins despite volume challenges from winter storm disruptions, highlighting winners and losers in a bifurcated market. Market trends. Consumer behavior shifts drove dramatic market trends in March 2026, with health consciousness, moderation, and value-seeking fundamentally reshaping beverage alcohol consumption patterns. The IWSR data revealed on-trade visits continuing to decline as consumers edit drinking occasions, prioritize value, and demonstrate greater intentionality in alcohol purchases. Gen Z emerged as a pivotal demographic, drinking with more intention and favoring experiences over volume, while wellness trends accelerated the boom in functional beverages. Olipop ramped up flavor innovation to capture this growth, and GLP-1 ingredient drinks targeted a $3.5 billion functional beverage opportunity. The broader Sober Curious movement gained momentum with celebrity-backed non-alcoholic brands proliferating. Ben Stiller, Kim Kardashian among backers, as alcohol-free beer, wine, and spirits. Sales spiked 22% from 2024-2025, with the UK adding non-alcoholic beer to its inflation basket for the first time, signaling mainstream acceptance of the category shift. Premiumization showed resilience in select categories despite broader volume declines, with RTD cocktails emerging as the standout growth engine, posting 30% plus sales increases in recent periods as spirits-based ready-to-drink products like Cutwater and Sun Cruiser gained consumers rapidly. Premium rum positioned to potentially follow tequila's successful premiumization trajectory of the prior decade, with high-end segments showing promise despite overall rum sales declines in on-premise channels. Wholesalers confirmed premiumization remains alive in wine, with revenue outpacing volume, though concern mounted over on-premise account contraction affecting distribution. Beer faced structural stagnation, with brewers confronting 1-2% volume declines in the US and Western Europe as pricing power waned, limiting growth and margin expansion. Beer is no longer a growth or margin expansion story, according to industry analysis. Premiumization's limits appeared as cost-conscious consumers adjusted pack sizes and purchase patterns amid inflation-driven pricing pressures, with value sensitivity increasingly constraining premium positioning. Category-specific trends highlighted both opportunities and challenges across segments. White wine demand surged in multiple markets, with UK consumers driving Verdejo sales spikes and German producers seeing export opportunities for white and lighter wines despite US tariff headwinds. Oregon wine production projected to exceed 6 million cases, with top labels averaging 15+ pricing, successfully navigating wildfire, pandemic, and inflation challenges. Mediterranean grape varieties positioned for a California breakthrough beyond traditional Cabernet and Chardonnay. Craft beer innovation emphasized lagers, with breweries returning to roots after overexpansion, focusing on quality and community over rapid growth. TikTok emerged as a powerful marketing platform, helping breweries reach new audiences and diversify customer bases despite regulatory uncertainties. Tequila releases proliferated with 5 notable March launches, while Baijiu gained Western recognition as the world's most valuable spirit. The cider market projected to reach $26.9 billion by 2032, challenging beer with premium, craft, and fruit-based positioning, appealing to generational shifts in drinking habits favoring lighter, innovative alternatives. Market analysis. Global alcoholic beverages. Market projections for 2026 showed modest but steady growth despite consumption headwinds, with market size estimated at $403.46 billion in 2025, growing to $425.69 billion in 2026, projected to reach $689.82 billion by 2035 at a 5.51% CAGR according to Global Growth Insights. Market composition remained dominated by beer, 48% share, spirits, 28%, and wine, 17%, with premium and flavored products driving incremental growth alongside accelerating digital sales channels. North America's alcoholic drinks market, valued at $415 billion in 2025, was forecast to reach $470 billion by 2032, with 2.18% CAGR, fueled by demand for premium, craft, and low, no-alcohol variants, regulatory evolution, e-commerce expansion, and strategic collaborations reshaping competitive dynamics. The spirits segment specifically projected growth from $152.94 billion in 2025 to $160.53 billion in 2026, 5.0% CAGR, reaching $200.49 billion by 2030, driven by consumer base expansion and innovative product developments across regions. RTD cocktails emerged as the fastest-growing alcoholic beverage segment, with multiple forecasts projecting explosive expansion. The global RTD cocktails market was valued at $3.93 billion in 2025, projected to reach $4.36 billion in 2026 and $8.4 billion by 2032 at an 11.45% CAGR, according to one analysis, while another forecast showed growth from $1.9 billion in 2025 to $5.86 billion by 2034 at 13.31% CAGR, with premiumization, lifestyle consumption, product innovation, and distribution shifts driving adoption. The RTD canned alcoholic beverage market specifically reached $19.5 billion in 2024, with 19.2% CAGR projected through 2033, led by canned cocktails and alcoholic seltzers capitalizing on consumer preferences for convenience and portability. Premix cocktail showed 3.6% growth from $25.81 billion in 2025 to $26.73 billion in 2026, with trade tariffs influencing pricing and supply chains while encouraging localized sourcing and packaging innovations. Category-specific market analysis revealed divergent trajectories with mezcal, wine stocks, and India emerging as key investment themes. The mezcal market projected to grow 2.1 times between 2026-2036, driven by premium spirits demand and authenticity, with Joven Mezcal commanding 76.1% market share in 2026, Espada and Agave dominating at 83.3% of source material, and Horeca, hotels, restaurants, cafes, accounting for over half of distribution. Wine stocks offered steady demand and reliable dividend income despite not being high growth, with LVMH Moet Hennessy, Constellation Brands, Treasury Wine Estates, and Willamette Valley Vineyards highlighted as top investment options, trading at attractive valuations as Constellation traded 16% below Morningstar's fair value estimate amid wine spirits headwinds offset by beer strength. India's beverage alcohol market presented compelling growth opportunities, with Brown-Forman targeting premium spirits launches to capitalize on the country's expanding consumer base and premiumization trends, while Paulaner reported 23.8% China growth in 2025, aiming to become the #1 international premium beer within 2 to 3 years, demonstrating Asian market potential. Product launches. March 2026 saw a robust pipeline of new product releases across spirits categories, with bourbon and whiskey dominating innovation as producers pursued premiumization and limited edition strategies. Jack Daniel's made headlines with its first 10-year age-stated whiskey in over a century across multiple batches, while Booker's released Big Easy as its first 2026 batch, a 129.1 proof bourbon aged 7 years inspired by New Orleans and Booker No's affinity for the city. Heaven Hill announced its 2026 Heritage Collection, featuring a 22-year-old Kentucky Straight Bourbon, the oldest in the series to date, showcasing pronounced oak, caramelized sweetness, and baking spices. Elijah Craig launched its inaugural 15-year single-barrel bourbon, Maker's Mark advanced its wood finishing series innovations, and Bulleit introduced mesquite smoked expressions. Rocktown Distillery debuted its Winner's Circle 2026 series, a 6-year Arkansas bourbon celebrating craftsmanship and racing tradition, while New Riff launched 6-year-old Silver Grove, straight bourbon and rye, and Remus introduced its first-ever wheat whiskey under the Master Distiller Experimental Series No. 2, finished in port and sherry casks at 113 proof. Premium and limited edition releases proliferated, with collaborative and experimental expressions driving brand differentiation. Hennessy released its VSOP Lunar New Year of the Horse 2026 cognac, designed by Chinese artist Xu Zhen with vibrant red and gold motifs, while Dom Perignon launched its 2017 vintage, noted as the Prestige Cuvées' smallest blend ever. Cooper and Thief partnered with Larceny Bourbon on a limited Napa Valley Red blend finished in Larceny's wheated bourbon barrels, targeting whiskey lovers with wine. Iron Smoke Distillery collaborated with guitarist John Petrucci on Rock the Barrel 3 Brown Butter Bourbon, inspired by a savory sweet craft cocktail, celebrating the launch at Hard Rock NYC. Gabriel Fluffy Iglesias introduced Pocho Fino Tequila with flavored and traditional expressions, blending Mexican and American heritage. Remy Martin launched Remy Fève, a clear, unaged spirit derived from a key cognac-making stage, formulated for contemporary cocktail culture rather than traditional cognac consumption, expanding beyond the brand's core category. Beer and wine innovation emphasized variety packs, seasonal releases, and experiential offerings to combat category headwinds. Oscar Blues unveiled Dale's IPA Mix Pack, featuring 3 popular IPAs alongside limited edition Neon Rodeo Slightly Sour Fruited Ale, celebrating bold, approachable craft beer. Rogue Ales launched Voodoo Donut Mango Astronaut Ale in pink 750ml bottles, continuing its donut-inspired collaboration series. Brooklyn Brewery introduced a trio of new limited edition craft beers to diversify its off-trade range. Von Ebert Brewing released volatile substance NW IPA varietals, expanding innovative styles. In wine, Limerick Lane Cellars released 2026 Zinfandel-focused expressions praised for vibrant fruit and balance. Gallo debuted its first luxury wines under the Monte Rosso estate label from the historic Sonoma Vineyard, and Bordeaux's La Place Spring Campaign featured smaller but high-quality releases, including Chateau Latour's 100-point 2019 Grand Vin. Middleton Very Rare launched its 43rd edition 2026 vintage Irish whiskey blending single pot still and grain whiskies at $240, while Douglas Laying unveiled Scallywag 18-year-old finished in Pedro Ximenez sherry casks for complex dried fruit and spice profiles. Industry news: regulatory and legislative developments shaped the industry landscape with significant policy changes affecting production, distribution, and sales. Mayor Muriel Bowser announced Washington, D.C.'s Hospitality Amendment Act of 2026 to modernize the city's alcohol laws, cutting red tape and creating new licensing pathways to support local manufacturers and the hospitality industry's recovery, with provisions to stimulate economic growth and support entrepreneurs focusing on Ward 7 and Ward 8. Virginia ABC implemented legislative updates effective July 1, 2025, making cocktails to go permanent, allowing serving of canned cocktails under specific conditions, and mandating human trafficking training requirements. The Alcohol and Tobacco Tax and Trade Bureau finalized establishment of the Neshoba Valley Viticultural Area in Massachusetts effective April 23, 2026, assisting vintners and consumers with wine origin labeling. India's FSSAI amended alcoholic beverage regulations effective January 1, 2026, introducing new classifications for mead, craft beer, country liquors, and low-alcohol beverages to align with evolving market trends, while Syria saw hundreds protest Damascus alcohol ban restrictions limiting sales except in select Christian neighborhoods, raising concerns about personal freedoms. Facility expansions and new venue openings demonstrated continued capital investment despite market challenges. Campari Group committed $160 million to build a second distillery at Wild Turkey in Kentucky as part of broader expansion initiatives, while Bushmills in Northern Ireland submitted planning applications for 26 new whiskey maturation warehouses as part of a $62.9 million investment to increase storage capacity. Francis Ford Coppola Winery unveiled new luxury pools, private cabanas, and wedding venues in Alexander Valley in March 2026, transforming the site into a full-service luxury destination. Goldcrest Distillery announced expansion with a new downtown Orlando location featuring state-of-the-art production and a tasting room for P1 vodka. Backroads Distilling Company planned to open later in 2026 at Country Heritage Winery grounds, combining distillery and winery experiences. Mythology Distillery opened a new Breckenridge tasting room in a historic barn on March 6th, while Spitalfields Distillery launched crowdfunding to open at London's Spitalfields Market by end 2026, focusing on transparency and local vodka, gin, and rum production. The Dalmore announced April 27th reopening with a reimagined Highland Distillery visitor experience. Industry leadership, events, and market infrastructure developments highlighted evolving competitive dynamics. New Zealand wine growers appointed Anishka Jelicic as CEO starting July 2026, bringing 2 decades of global wine industry experience, including Pernod Ricard leadership. Southern Glazer's Wine & Spirits expanded its distribution agreement with Pernod Ricard USA, enhancing brand availability across more states, and announced Eric Hemmer as co-host of its Served Up podcast, bringing elite wine and spirits credentials. The Global Artisan Vintners Alliance marked its first anniversary with new member Parle, South Africa, and announced its 2026 summit in Hungary and Croatia, promoting sustainable wine regions. Tales of the Cocktail Foundation revealed the top 15 U.S. finalists for the 2026 World-Class Bartending Competition under its new Diageo partnership, with Chicago hosting May competition ahead of Dubai's global final. ProWine 2026 in Dusseldorf planned to tackle tariffs, trade barriers, no low alcohol, and wine's future with master classes and panels. The National Restaurant Association show honored 28 products with 2026 FABI Awards recognizing beverage innovation. YVI Central Coast gathered in Paso Robles as the largest Central Coast winery, grower, and vendor event, while the Wine Market Council Research Conference in Napa featured a wine innovation panel sharing case studies to strengthen brands amid industry transformation. Cross-category insights. The confluence of M&A consolidation, financial distress, and market trends reveals a beverage alcohol industry undergoing profound structural transformation driven by oversupply, changing consumer preferences, and the imperative for scale. The Pernod Ricard Brown-Forman merger discussions epitomize defensive consolidation as companies seek synergies and cost savings to weather multi-year volume declines. The same force is driving distribution consolidation through Reyes's RNDC expansion and Southern Glazer's aggressive acquisitions. This M&A activity directly correlates with financial developments, showing widespread distress among smaller producers lacking scale. Brewdog's administration, dozens of brewery and winery closures, and bankruptcy filings from Rotten Little Bastard to Uncle Nearest demonstrate that mid-sized and craft operators face existential pressure without the pricing power, distribution reach, or balance sheet strength of consolidating giants. The bifurcation is stark. Chobani invests $567 million in La Colombe RTD coffee expansion, while 56-year-old Kenwood Vineyards shuts permanently, illustrating capital flowing toward growth categories, RTDs, functional beverages, while traditional segments contract. Product innovation patterns align precisely with identified market trends, as producers chase the few bright spots in an otherwise challenging landscape. The explosion of RTD cocktail launches and acquisitions, Monaco Cocktails, Dirty Shirley, RTD market growth exceeding 30%, reflects manufacturers pivoting toward the fastest-growing segment projected at 11-19% CAGRs through the early 2030s, while bourbon and whiskey innovation focuses heavily on premiumization through age statements, limited editions, and experimental finishes. Jack Daniel's 10-year, Heaven Hill 22-year, Elijah Craig 15-year, to capture margin in a volume-challenged environment. The proliferation of non-alcoholic product launches and celebrity-backed NA brands, Ben Stiller, Kim Kardashian, directly responds to the 22% spike in alcohol-free sales and health-conscious Gen Z moderation trends documented in market research. Wine producers' emphasis on Mediterranean varieties, white wine positioning, and experiential luxury, Coppola's pools and wedding venues, Chateau Latour's 100-point releases, targets the premiumization and lifestyle trends that wholesalers confirm still drive revenue despite volume declines, demonstrating how product strategy adapts to sustain margin amid consumption headwinds. The industry's structural challenges stem from a fundamental mismatch between pandemic-era production expansion and post-2021 consumption contraction, exacerbated by generational preference shifts and geopolitical disruption. The $22 billion in aging spirits inventory and 19.8% wine volume decline since 2021 reflect overproduction during lockdown demand spikes that evaporated as consumers returned to pre-pandemic baselines with added health consciousness, the same dynamic causing craft beer's structural stagnation with 1-2% annual volume declines. Trade barriers compound these organic pressures, with Canada's wine ban devastating U.S. exports by $357 million. 78% drop, and tariff uncertainties mentioned across M&A rationales, Pernod-Brown-Forman synergies partly driven by tariff mitigation. The generational dimension proves particularly consequential, as Gen Z's intentional drinking, preference for experiences over volume, demand for transparency, and openness to cannabis alternatives fundamentally challenge volume-based business models built for baby boomer and Gen X consumption patterns. This explains why growth concentrates in functional beverages, premium RTDs, and experiential formats, distillery tourism, tasting room conversions, that align with younger consumers' values, while traditional grocery channel wine and mainstream beer face structural headwinds absent significant repositioning. Geographic and regulatory dynamics further complicate the landscape, with emerging markets, three-tier system evolution, and localized policy changes creating both opportunities and friction points. India and China emerge as critical growth markets, Brown-Forman targeting India premium launches, Polliners 23.8%, China growth targeting number one positioning, as mature Western markets contract, yet tariffs and regulatory barriers, Syria's alcohol restrictions, FSSAI regulation changes, EU ingredient standards diverging from U.S. rules, fragment global strategies and necessitate market-specific approaches. Distribution consolidation through Reyes and Southern Glazer's acquisitions reshapes the three-tier system's power dynamics, potentially reducing supplier negotiating leverage and retail diversity while theoretically improving efficiency in a lower volume environment. Regulatory modernization efforts like D.C.'s Hospitality Amendment Act and Virginia's Cocktails to Go permanent support on-premise recovery and manufacturer direct-to-consumer channels, while viticultural area designations, Neshoba Valley, and ingredient transparency movements, half of U.S. shoppers wanting EU-style artificial ingredient bans, reflect consumer demand for authenticity and localism that advantages craft producers who survive consolidation. The net result is an industry simultaneously globalizing through mega mergers while localizing through craft, transparency, and experiential positioning, a paradox that will define competitive strategy through the remainder of the decade.